The FTSE 100 is usually considered a stock market that is lacking in stock performance. It's been pretty flat over the last decade if you don't include dividends. In the whole of 2023, it was only up 4%, and in January of 2024, it's down 1%. And the FTSE 250 has pretty much been the same, flat in January and measly returns over the last 10 years. But even though the whole stock market returns haven't been great, there are still diamonds in the rough, stocks that have outperformed the whole UK market, and not just by a small margin. In this video, we're going to take a look at the FTSE 100's top 10 performing stocks in January 2024. Let's get into it. Flutter Entertainment is a UK-based global gaming and betting company. Flutter Entertainment isn't a well-known name until you mention that it owns brands such as Sky Betting and Gaming, Paddy Power, Betfair and Tombola in the UK, and FanDuel, Betfair and PokerStars across the globe. This is a huge range of popular gaming and gambling sites and apps. Sports betting has been very popular in the UK for quite a long time now. If you watch any kind of sport, you'll see adverts for this all the time. But in the US, it's just started to take off. If you've been keeping up with any of the big news items across the pond, you'll have seen this. Sports betting was made illegal by many US states in the 90s, but in 2018 they actually went back on this and they've started to legalize it across many of the states. Sports betting brought into the US $7.4 billion in 2022, which is a 71% gain over the year before, and is predicted to be growing. So this is why Flutter Entertainment has been doing so well recently. Let's take a look at the stock performance. Year to date, they're up 24%, and just in January, they're up 18.3%. And if we look over the last 5 years, they're up 185%. A great performance, considering this is listed in the UK. Their current share price is 17,085 pence, or £171 at the time of making this video. But with their strong performance recently, I can see this changing in the near future. Many analysts think this is a good buy right now, but let me know if you would gamble your money on a betting company. Intermediate Capital Group is a private equity investment firm focused on providing capital in the public and private markets. The stock price is up 8.1% in January and has been on a very good run recently. I believe this stock will provide good returns when the sentiment on investing is good. So when interest rates begin to come down, I believe this stock will be a good buy. They pay a relatively high dividend at 4.2%, which is split into 2 dividend payments per year. And this dividend seems to be growing quite nicely over the last few years. But like I said, I think that ICP relies on good market conditions for their business to thrive. Hikma Pharmaceuticals is a British multinational pharmaceuticals company headquartered in London. They manufacture non-branded, generic and in-licensed pharmaceutical products. The stock is up 8% in January and is up 15% since November last year. This was after their investment update in November, when they improved their operating margin outlook from 18 to 20% up to now 20%, which is at the top end of their original guidance. This change in guidance is mainly due to their strong revenue performance from their new sodium oxybate generic drug. I don't know much about this company, but if they continue to perform, I'll consider doing a deeper dive. They do pay a dividend twice a year, and if you look at their dividend over time, you can see that it has been growing year on year. The current dividend yield is 2.5%, and you can see that their dividend growth year on year is looking very good. In 2022, their year-on-year growth was 3.7%, and over the past 5 years, it's averaged a growth rate of 9% per year. But the dividend growth seemed to be slowed down by the pandemic in 2020. The dividend growth prior to this date was over 10% per year. They next report earnings on the 22nd of February, so at the time of making this video, it's due to be released next week. I would like to note that it is in the pharmaceutical sector, so this company is quite cyclical. RELX is a British multinational information and analytics company headquartered in London. Its businesses provide scientific, technical and medical information, legal information and analytics, decision-making tools and organize exhibitions. They basically provide data analytics for different sectors in the economy. They do business with 92% of the Fortune 100 and 78% of the Fortune 500. So they're working with some of the biggest companies in the world. And over 70% of their revenue is subscription-based, so they have very reliable income. The stock has done very well this year, up 6.3% in January, and up nearly 11% so far into 2024. And if we take a look at the stock over the past 5 years, we can see that it has continued to grow. Intertek Group is a British multinational assurance, inspection, product testing and certification company headquartered in London. They provide quality and safety assurance to industries such as healthcare, construction, food and transport. The stock price has been pretty good since the turn of the new year. They're up 6.27% in January. The stock price hasn't been particularly good since the pandemic, and they haven't really recovered since their 2019 prices. The stock price seemed to go up from November 2023 based on a good trading report that they released in that month. Intertek announced that they had a year-to-date revenue growth of 7.3%. They're reporting earnings in March, so if you're an investor in this stock, the 2nd of March is a good date to look forward to. They pay 2 dividends a year, and the ex-dividend date for their final dividend of 2023 will be on the 20th of May. So if you want to get paid on the 13th of June, then you'll need to buy it before then. Persimmon is a British house building company headquartered in York. Persimmon has had a torrid time since the pandemic. House buying was at an all-time high during the pandemic, so their stock price boomed. Then interest rates started to rise, and global conflicts were turning house building resources into hard resources to find. So Persimmon's costs went way up. The price to build a home skyrocketed due to many overseas sourced resources like wood and metals were going up, and the price to fund a house build was going up due to the price of money going up. Interest rates went from 0.1% up to 5%, and getting loans to fund the house building would have cost a hell of a lot in interest. The positive news in October and November last year showed that inflation was slowing, and the likelihood of interest rates coming down was increasing. This gave a positive outlook for Persimmon. Both aspects, like the cost to build a home and the cost to fund a home, were likely to come down in 2024. The stock price went up 6.1% in January. Although I believe it will be a long time, at least until the end of the year, before Persimmon will see the full effects of the market changes I've previously mentioned, I do think that housing in the UK will continue to boom, so this is a good company to keep an eye on. GSK is a British multinational pharmaceutical and biotechnology company headquartered in the UK. GSK stock has done pretty well since about midway through 2023, up 26% since July last year. I recently did a stock analysis on GSK where I talk about the company as a whole and whether I think is a good buy at these prices. GSK's dividend yield is sitting at around 3.5%. and has been coming down recently due to the good stock price performance. I do think it's good to note that GSK's dividend is quite volatile due to the nature of the sector that it's in. In January, the stock price went up 6% and has continued on this run all the way through to midway through February. At the time of making this video, it's up 12%. I would like to note that I do hold GSK in my portfolio. It's one of the biggest positions in my portfolio, sitting at around 11%. I do think GSK is a very strong dividend-paying company. Along with their guidance stated in their earnings report in January and strong stock performance, I do think that GSK could belong in any good UK-based stock portfolio. They recently raised their dividend in Q4 of 2023 from 14 pence per share in the quarter to 16 pence per share, and they announced that they expect their dividend in 2024 to raise by about 3%, from 58 pence per share up to 60 pence per share. They recently paid a dividend in January, and their next dividend will be paid in April. So if you want to be paid that dividend in April, you'll need to be owning GSK stock before the ex-dividend date on the 22nd of February. Pershing Square Holdings is a large Guernsey investment trust dedicated to long-term investments in North American companies. The fund is managed by legendary investor Bill Ackman of Pershing Square Capital Management. The stock went up 5.94% in January, and due to its many holdings in the US, it's had a very good return since its start in 2012. This is similar to Berkshire Hathaway or 3i Group. You're just buying a company that buys other companies. If you do hold this stock, you're basically investing in the people that are managing the fund. Bill Ackman, who runs this fund, has had an amazing performance over the last 10 years, up 184%. That is an annualized return of 18.4%. So if you don't think you can beat that, then take a look at Pershing Square. 3i Group is a British multinational venture capital and private equity investment firm based in London. The stock rose 5.7% in January. Like other investment firms or private equity firms, it relies heavily on the performance of other companies and the performance of the people involved in investing in those other companies. I would have to take a deeper look of the people who own this company or the people involved in making the investments in this company to be able to give you a better idea of how this company will do in the near future. But looking at the past performance, you can see that they've been doing very well. As I'm looking at their stock price since their inception, you can see that it is very momentum based. As we can see that the stock price rose and fell with the dot-com bubble and again with the real estate crash in 2008. Experian is a multinational data analytics and consumer credit reporting company headquartered in Dublin, Ireland. Experian collects and aggregates information on over 1 billion people and businesses, including over 250 individual US consumers and over 25 million US businesses. Experian stock has returned 5.5% in January and has been on a continual climb since about October, up over 40%. They reported earnings in January for the quarter ending in 2023 and showed a gain of 9% of quarter-over-quarter revenue. Experian pay a bi-yearly dividend and can see from this graph that it's growing year over year. You can see that the yield is dropping, but this is due to strong stock price performance. They recently paid their dividend in February, so the next dividend that you'll receive is in July. BAE Systems is a British multinational arms, security and aerospace company. Formerly known as British Aerospace, they are the largest manufacturer of these arms and aerospace parts in the UK, and the largest defence contractor in Europe. BAE has performed very well in recent years, up 5.5% in January, up nearly 40% in the last year, and up 164% in the last 5 years. When looking at global events over the past few years, it's easy to see why this stock has done really well. Russia invaded Ukraine in 2022, the conflict in the Middle East heated up in 2023, and with the growing unsettlement of other countries around the world, BAE Systems have reaped the benefits of it all, providing arms, plane parts, engines to help combat all of it. And if you were an investor, you would have done quite nicely out of all of it. BAE pays a small dividend of currently 2.26% and is growing by a few percent every year. If these conflicts continue over the next few years or even decades, we could see BAE's good performance to continue also. I would like to go into the stock a little bit more to find out if it's worth buying at these prices. I think I'll do that in the future. Let me know if you hold any of these companies in your portfolio. And also, let me know if you want to see me do this again for next month. There are probably a handful of stocks that you'd like to see on this list for next month. That is the end of the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, please leave a comment below and I'll give you a reply.